Hi everyone, hope you're all doing well, and today we're going to talk about Facebook stock, which reported earnings last night, and the earnings were absolutely amazing. The stock is currently up 6% in pre-market hours, and we'll just dig into these earnings a little bit, but if you haven't already, smash the like button. If you're new, make sure you subscribe as well. But yeah, Facebook reported earnings last night, and they were absolutely amazing. I think that these guys and Shopify were the two standout ones for me at the moment so far, which is absolutely amazing because the two are my biggest positions. So yeah, the portfolio is looking pretty healthy at the moment, and yeah, Facebook shares should see a nice little uplift today, unless it does an AMD and totally reverses back. It should look pretty good. But yeah, I mean, obviously Shopify earnings yesterday were absolute blowout earnings, 10 out of 10. Facebook, I think you could argue the case once again, they were just as good or maybe even better, and definitely the two earnings so far, the best in the earnings season. Obviously, I'll give a shout out to Google and Apple. Theirs were pretty strong, but Facebook, it's going up 6% in pre-market hours, and yeah, these guys in Shopify have absolutely blown it out of the water. And today, what we'll do is we'll just go over a couple of points with the Facebook earnings and where I see the company going in the next kind of few months, and even further down that, the next few years as well. Now, quite funny because when I was thinking about this, and I thought, it was so obvious this company was undervalued for so long, disrespected for so long. I mean, this company was trading at like a P ratio of like 22 for ages. I mean, it's now getting a little bit better, sitting around about a P ratio of 30. But, for me, this is going to be $1 trillion market cap, easy. You don't have the likes of Instagram, Facebook, WhatsApp, even Messenger. Those are four massive platforms that everyone uses, and there's so much potential with them that which we'll talk about, that is still not being stated, and even past the social media platforms are even expanding past there right now. But first of all, what made me think it straight off is that it was about 10 months ago, and now I made this video, which is why Facebook, which was in the old setup as well, which is funny enough. The lighting always was shocking back then. We've gone a little bit more upmarket since them days, but still things to work on. But anyway, back to the point. It made me think of this video that I put out 10 months ago, which was why Facebook stock is going to $300. Now, obviously, since then, it's gone past $300. It's beaten my expectations. I kind of thought that it would be probably $300 plus in the next kind of 12 to 24 months. Obviously, it's beaten it even before then. And pretty much on that video, I kind of went on to say why I think Facebook is such a good stock, why it's undervalued, why it's going to go up to $300. And then I thought, well, it was my biggest position at the time, and even here, it was my biggest position. And I thought, well, I'll have to kind of like reevaluate it now and where I see it going. And then I put out this video here three months ago saying why I think Facebook stock is now going to go to $400. But looking at this now, we're at $326. I think, we're 3 months in. I think we could be at the same situation where, 10 months in, this could be a $400 stock, and I might have to bring another video out about why Facebook's going to $500. But even then, when I say $500, I do think it could even have even more upside than that. I think there's a lot of potential here with this company. But if we actually go on to the actual earnings, it was a triple beat. We beat EPS, we beat revenue, and also the outlook as well was upped as well. So we had a nice triple beat. Now, going into, if you actually watched my video, I believe it was Sunday night, I talked about Facebook. I was like, I'm actually going into Facebook earnings very confident that they're going to do good numbers, and they did. But the only thing that spooked me was yesterday when I saw Pinterest, and Pinterest bought out triple B EPS revenue outlook increase as well. But Pinterest got absolutely slaughtered because the daily active users were slowing down. And I thought, oh, well, Facebook probably will have the same thing. So are they going to get slaughtered as well? So I was kind of like, I went into earnings quite bullish on Facebook. And then I saw Pinterest and I kind of like, oh, I don't know now. And as soon as I saw the daily active users, I was thinking, oh no, it's going to do Pinterest, because it was obvious the daily active users were going to slow down a little bit, because we've had the CV situation where everyone's been at home and people are using the platform more, and obviously they're going to slow down, the growth's going to slow down a little bit as we have the catch-up period. But it's a bit like, what are they going to do with the new active users that have come in? And are they going to make more money from them? That was a big thing that we were thinking 12 months ago. And you look at what they did on the revenue side of it. The revenue was putting in 47% year-over-year growth. And revenue of 26 billion, and it beat by 2.4 billion, which is really, really good beat. And that's the thing, Pinterest was very same. It's what they did with them, and for some reason Facebook was taking how it should have been taken, because normally, if you guys have followed Facebook for such a long time, this has been a company that's grown at a 20% revenue rate. So obviously this is a lot higher than what it's previously been. Obviously, it had a little bit of a slump because of ad rates and stuff like that, because of the CV situation. But this is still very, very good growth. For a 47% growth year over year. They have really seen a rebound, and a bit like Google. And this is fantastic. And even on the EPS side of it, EPS of $3.30 beat by 96 cents. Really good. And as well as that, when you look at like the P ratio, forward P ratio, that actually will help with like bringing the valuation down even more going forward, which is great. The CFO outlook here, we expect 2021 total expenses to be in the range of 70 to 73 billion, updated from our prior outlook of 68 to 73 billion. So that was also fine from that point of view. The year-over-year growth in expenses driven by investments in technical and product talent, and there should be something. 2021 capital expenditure to be in the range of 19 to 21 billion, down from our prior estimates of 21 to 23 billion. And also, I think it might have been in the press release somewhere. We went on to go about the actual guidance, and the actual guidance was pretty good, but the revenue side of it, on the guidance side of it, was pretty stable. Like, one of the things that we saw, what was the big worry, is because Apple have brought a new update which kind of protects privacy, and how Facebook might be able, can they advertise as well with this privacy update that Apple have brought out. Seems like at the moment everything seems stable. I mean, they only got launched a few days ago, so maybe we'll see more of that in like Q2, Q3. But at the moment, outlook looks pretty the same. So that was pretty good from that point of view. That was all good. Another thing that kind of went unnoticed with these earnings is Facebook now expanding past the classic WhatsApp, Facebook, Messenger, Instagram, all great platforms, but Facebook for so long, it was aggressively expanding, and I feel like Facebook over the last kind of three years really. Obviously, I think splitting off Messenger was a great move, but they haven't done much since then, and it seems like now they're kind of like kicking on and making another income stream, which is great, because the big thing with Facebook is we want them to have a bigger moat if anything was to happen, say an iOS update with Apple or anything like that. All of that part of the company would be affected. So if we can expand past that, that would be absolutely amazing. And that is happening with their Oculus, the VAR, like gaming headset. You probably know what I'm on about. I think most of you will seen them, maybe even use them. And also they did their video portal. You might have seen the adverts on TV for that product that they brought out. It actually came out that part of the company is making up, I think, 3% of the total revenue now, and I think the rate they're growing at is like 140 something percent. I haven't got the numbers in front of me, but it's somewhere around that rate. So it's really good to see that part of the business now taking up a bigger chunk, and also the growth numbers were absolutely fantastic. Once again, obviously there'll be some part of the work at home lockdown trend that is in there, but still it's great to see that growing, and I do think that has a lot of potential. And once again, I've not fully gone through everything yet, like the earnings call, but from what I've seen, there was some comments about Mark Zuckerberg, and I think he went on to say about focusing on building out the e-commerce side of the company, which I think is also very unappreciated, because you think about, okay, if Facebook can actually become an e-commerce platform, so your social media, you've got e-commerce and also a gaming platform. If they can develop the e-commerce through Facebook Marketplace and have like a you don't have to look at the likes of like eBay, Amazon, Shopify. You look at them companies, if you add an e-commerce play to this company, and that's what they're going to focus on growing on, that could be absolutely huge. Buying an e-commerce company in this side of the business as well would be massive. And when you've got a platform that pretty much everyone uses, you're adding an e-commerce play that could help further down the line with revenue. You've already got the audience, you already got people that use the platform, so if you're able to advertise and then also sell on that platform, that could be huge further down the line and just develops the company. And obviously e-commerce is going to grow huge in the next kind of coming couple of months, years, decades even. So yeah, it was good to hear some comments about that side of it. So yeah, overall it was pretty good with the revenue, the EPS side of it. Good to see the VR side of it. Also good to see the portal side of it. Good to see that they're still focused on e-commerce, and good to see that it doesn't look like too much of an impact just yet. With the Apple update, we'll probably get, obviously that's only just come out, so we'll probably get a better update with that in Q2. But in terms of like where I see the stock going, where I sell the stock, I still can't sell this company even right now. I like I said, I still easily see this going to $400. And yeah, I can only see people using the platforms more and more. I can only see the other parts of the company growing more and more. And yeah, I'm still at least 2 years off selling this. And yeah, I think at the moment, like even at $400, I still couldn't sell it. It would still need to go up a lot more from here. And great numbers overall from Facebook, and I was pretty impressed. And obviously, when it's one of your biggest positions, it's always a great feeling to know that the company that you've invested in, that you saw doing a lot of these things. Obviously you can go back on the videos, and a lot of these things that you thought would play out in the next 2-3 years are happening. And yeah, this is the benefit of seeing a long-term game plan and it coming into effect, and you see it in earnings. And yeah, congratulations to all you Facebook shareholders, because I'm sure you'll be pretty happy today. It's now up 7%. So yeah, we'll see if it gives it back. But yeah, really good results anyway. But hope you enjoyed it. Smash the like button if you're new, subscribe. If you do want to join the Patreon, links in the description. And if you do want to start investing, there's some links in the description to some brokers as well. Join through there, and you also get some free shares as well, which is pretty good. And I'll see you in the next video.